The Precious Metals Week in Review, April 15, 2016. Brought to you by Precious Metals International. Geopolitical and macroeconomic uncertainty continued this week as a slew of weak data out of Asia and a weak print for the U.S. first quarter GDP continued to cause analysts to question the true state of the globally connected economy. The number of Americans filing initial claims for state unemployment benefits plunged last week, falling by 13,000 claims to a new seasonally adjusted level of 253,000 claims. The drop sent unemployment claims back to levels that match 42.5-year lows last seen in 1973. The previous week's data was also revised to show 1,000 fewer claims than previously reported. Jobless claims have been below the key level of 300,000, the level most economists view as a healthy labor market, for 58 straight weeks now. Despite what appears to be a steadily improving job market, according to Gallup's U.S. Economic Confidence Index, 59% of respondents say that the U.S. economy is getting worse, compared to 37% that said the economy was getting better. March retail sales, which came in at a 0.3% decline, indicate that the U.S. consumer, which most economists say is a key part of any robust economic recovery, is simply not participating. Friday's release of the initial read for U.S. consumer sentiment also seemed to reflect this data, coming in at 89.7 instead of the expected 92. If the consumer sentiment number stays at its current level or drops lower, it will be the fourth straight month that consumer confidence has fallen in the U.S. Elsewhere in the U.S., it appears that prices for high-end real estate, particularly in the South, are declining once more. In Miami, the total number of sales in the area fell by 21.1%, even as inventory surged by 33%. According to reports, inventory in the Miami area is now at a staggering 21.5-month supply, which means that property sales are taking longer and longer. According to CNBC, real estate experts say that a combination of a drop-off in overseas buyers mixed with a renewed surge in construction of luxury condominium towers are the main culprit in sending prices lower in the Miami area. Japanese Finance Minister Taro Aso and U.S. Treasury Secretary Jack Lew jointly announced that they had agreed to honor their G7 and G20 exchange rate commitments. In February, the G20 finance leaders met in Shanghai and apparently agreed that countries should not engage in competitive currency devaluations. The groups, however, also apparently agree that excess volatility and disorderly currency moves are undesirable. Japan feels that the latter agreement gives it the right to intervene in the currency markets if the yen surges rapidly, which it is currently doing again. On Monday, the yen hit a 17-month high against the US dollar. On Thursday, Singapore's central bank surprised market analysts by easing its currency policy as its manufacturing sector showed signs of sluggishness, and the monetary authority said that growth was expected to be weaker than previous estimates in 2016. Most economists had expected Singapore's central bank to keep its monetary policy steady for the foreseeable future based on a budget that was revealed last month. In Japan, wholesale prices in March fell 3.8% on the year, according to data the Bank of Japan (BOJ) released last month. The move showed up in the Corporate Goods Price Index, which measures the price that companies charge each other for their goods and services and does not bode well for the BOJ's goal of hitting 2% inflation. China released its first quarter growth results this week, and they came in slightly under expectations. China's official economic growth statistics showed that the economy grew at 6.7% in the first quarter, down from the last year's fourth quarter figure of 6.8%. In a report released earlier this week, the International Monetary Fund (IMF) warned that roughly $1.3 trillion in corporate bank loans were owed by Chinese firms that do not earn enough revenue to even make the interest payments. The IMF estimates that if this situation is not resolved, bank losses in China could amount to nearly 7% of the country's GDP, which would completely counteract the sluggish growth figures. In Europe, the Bank of England (BOE) voted unanimously to hold interest rates at the record low of 0.5% over concerns that global growth was slowing and growing uncertainty over the results of a June referendum on the United Kingdom possibly leaving the European Union (EU). BOE Governor Mark Carney warned earlier in March that if the UK leaves the EU, that the impact to the UK economy could be completely devastating. U.S. oil prices maintained a level above $40 a barrel for most of the week on continued rumors that Sunday's meeting in Doha, Qatar, could result in a cooperative production freeze for oil. The agreement, if reached, will see production for oil frozen at its January levels. The International Energy Association, IEA, in its latest monthly report said of Sunday's meeting, if there is to be a production freeze rather than a cut, the impact on physical oil supplies will be limited. The IEA also trimmed its estimate for global demand growth for 2016, so despite declining production levels in the US, an accompanying drop in global demand could mean prices remain locked at their low levels due to continued oversupply. The euro began the week looking like it was going to trade sideways against the US dollar, but had begun dropping by late Tuesday, trending downward until it found a bottom on Thursday and began moving sideways once again. The euro appears set to close the week lower against the US dollar. The Japanese yen began the week with a series of brief spikes and drops and then began trending downward against the US dollar for most of the week. The yen found a bottom on Thursday and also appears set to close the week lower against the US dollar. In a March 22nd commentary piece on CNBC, Michael Pinto listed several points in which he discussed why now is a good time to own gold. The full article can be found on CNBC and is titled Why Goldman is Wrong About Gold. Click the link to read the full article, which is extremely informative and well worth the time it takes to read it. We feel it pertinent to reiterate the closing paragraphs of the article here. Those who are still making short calls on gold, expecting that it will fall further, fail to understand that negative nominal rates coupled with rising inflation expectations are the rocket fuel for gold, especially since central banks are trapped in this vortex of persistently reducing the value of their currencies vis-a-vis their trading partners. Even our Federal Reserve found it necessary to renege on its plan to raise rates 4 times this year after the markets fell apart in January. But from this folly, there is no end. The intervention of central banks in the capital markets has become so extreme that they are now incapable of selling their securities and fighting inflation without sending equities and bond prices crashing. In effect, the inevitable binary outcomes have now become intractable inflation or depression. This is the real reason why the bull market in precious metals has just begun. Meanwhile, uncertainty created by growing tensions between the US and Russia and China and terror attacks like the ones we saw Tuesday on Brussels will drive more investors to the relative stability found in gold. That just solidifies the argument for gold going higher. Noted commodities trader Dennis Gartman also appears to be getting bullish on precious metals, discussing palladium's reversal in his most recent newsletter, saying, "This reversal to the upside came out of nowhere yesterday, and now that it has, we shall consider very seriously becoming bullish of all the precious industrial metals relative to gold. That is, we may soon buy palladium, platinum, and silver while selling gold." Mr. Gartman went on to say later in his newsletter that when gold gets to the point where it takes 80 ounces of silver to buy 1 ounce of gold, gold's expensive and/or silver's cheap. Referencing a chart showing palladium's upward movement on Thursday, Mr. Gartman said, "And in light of the chart of palladium above, this chart is screaming at us to buy silver relative to gold." As we await news out of Doha this weekend on the direction that oil will take next, it remains important as always to monitor global news outlets for items that could affect the price of precious metals. As media outlets and market analysts alike begin to talk favorably of precious metals once again, a sudden surge in demand could seriously overwhelm what has become a limited production ability as mining companies, facing huge step loads at these unsustainable prices, have shut down their underperforming mines in an attempt to stay afloat through these trying times. Wise investors have continued to take advantage of these low prices for precious metals to acquire additional physical product as part of a well-diversified investment portfolio. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, April 15, 2016. Brought to you by Precious Metals International.